Welcome back to Inspector Toolbelt Talk. We have what I'm anticipating to be one of our favorite guests here on the show today. I don't call him a friend; he's my brother, basically. Tom Kubiak, a brother from another mother. How are you, Tom?
Great, Ian. It's so good to be with you. Thanks for having me on.
Yeah, thanks for being on. So, we'd like to introduce Tom as he's an accountant extraordinaire. He's been my friend and accountant for I don't know 20 years, Tom.
More than 20 years, I think. Yeah.
Yeah, more than 20 years. Yeah. Oh wow. Oh man.
It's
So
sad.
yeah, I know. Every time I like when Beyond's here, I'm like, oh man, remember this? It was like 5 years ago. I was like, no, that was like 20. Like, oh man,
I know time goes by faster than you think.
yeah. But you are an accountant extraordinaire, and I'm probably gonna laugh at me for saying that because you're also humble about it. But you work with a lot of home inspectors because you work with me and other home inspectors in my market, and you
I
kind of
do.
know our deal pretty well.
A little bit, yeah. I've gotten to, I'm certainly not the person to talk about the home inspection side of it, but I have talked and helped a lot of home inspectors with the accounting and tax side of it.
Yeah, well, I know you've helped me. So how long have you been an accountant?
So I've been in the accounting field for a little over 30 years. I graduated from college and worked with an accounting firm right out of college. And then after that, worked in developing my own practice, built my practice up pretty good size actually. We were actually the largest accounting independently owned tax preparation firm in the Capital District of New York. And then over the past few years, I've kind of been managing it down a little bit to be able to focus on some other volunteer activities that my wife and I like to be involved in.
Yeah, well, your guys' volunteer service is extensive and impressive too. But right now, your accounting firm is Owlview, and we'll put a link to that in the transcript of the podcast here. Because if you do live anywhere near our area of New York, the Capital District, Tom's the guy to go to. He really is. Um,
Thanks.
from well, from many years ago, we were just joking before the podcast started about how I am a financial doof, is how I describe myself. I'm good at making money, but it's not on purpose. I like to do things and make things work, and money happens, and then I have it. I'm like, what do I do with it? And you've always been like, oh, okay, Ian, just let's take that jar and put the money from the jar into something real.
Ian, we actually have that discussion with clients all the time because oftentimes people, especially self-employed people, professionals, they're good at what they do, but they're not good at the other side of it, which is the business side of it. That, they can make the money, but they don't often know what to do with it or how to make it last longer, how to finagle things so that you don't lose as much to taxation. And that's where, partnering with a good accountant really makes a huge difference for a small business.
Yeah, and I actually kind of want to jump to that point a little bit because a lot of times we, as independent business owners, which is a lot of who we are as home inspectors, a lot of small businesses, we tend to think that we can do it because we've done it. That's what I used to think.
Yeah.
I keep my ledger on a spreadsheet. I know what's going on. I
Yeah.
don't miss a receipt. But it's kind of like the weekend warrior father-in-law is coming to a home inspection saying, I know how this should be built. I've built a house.
Yeah.
I know how this works. And we get frustrated by it because we don't know what we don't know.
Yeah.
And
I can guarantee you that's true because I've followed you around home inspections for properties that I've bought. And I think of myself as a halfway decent
you are.
homeowner,
Yeah.
but I know nothing when it compares to walking behind a trained home inspector. So you can say the same thing about accountants. Even if a home inspector is able to balance their checkbook or keep their records appropriately, tying in with a good accountant really is going to make a huge difference. Going to let them tweak what they're doing.
Yeah. And to kind of put that in perspective, a lot of times we're like, well, what can an accountant tell me that I can't learn on my own? There's going to be nuances. There was nuances that you showed me that you were like, "Oh, here's a little tweak," and it's just like $8,000. I'm like, "That's not a little tweak, man.
Yeah,
That's
it's
how did
true.
you know to do that?" And you're like, "Well, I've done it for 500 people this week." So
Yeah, it's
it's
true.
really important to have a good accountant like Tom here. Um,
Yeah.
if you don't have an accountant, it pays for itself and then some.
Yeah, that's very true.
Yeah,
Yeah.
it's
And if I could say, when you're looking, when your listeners are looking for an accountant, try to find a small independent accountant. Look at the guy who's got one office or the woman who has one office and just can focus on her clients. To stay away from the big firms like Jackson Hewitt or H&R Block. You're going to get a lot better service from the independent accountant.
And why do you say that? Just because they're more homegrown and less about volume, or?
Yeah, less about volume, more customer service oriented, it's more of a relationship. So similar to what you have with other professionals, a lawyer, a doctor for that matter, when you develop a relationship with an accountant, that accountant learns your business and is looking out for you. And as a result of that, you're going to get good advice. So it's more than just the books. It's the advice the accountant can give you.
Yeah, and I can add to that because there's been times where it's not tax season. We're not
Yeah,
communicating a lot about anything except maybe Star Wars or something like that. And all of a sudden, you shoot me a text, and you'll say, "Hey, Ian, you should do this real quick. I just learned about it," and it
yeah,
applies very specifically to me because you know me, you know my business, and if I'm with a Jackson Hewitt or H&R Block over at Walmart, you
yeah,
know, they're
exactly.
they're not calling me mid-year to say, "Hey, hook yourself
That's
up with this."
exactly true. Yep. Yeah,
Okay.
exactly true.
Well, and actually, a good example of that, we're going to jump ahead just slightly. You were actually just telling me about something called I bonds, and we're going to have talk about
Y-
business setup and all sorts of things. But this was something we're talking about ahead of time because ties in with a podcast that we had a couple weeks ago with Nick Gromiko about investing and putting money places and inflation. What are I bonds?
Yeah, so that's a great question, Ian. Many people right now are nervous about the economy, and I'm not a financial advisor, so take everything that I say with a grain of salt and run it by a financial advisor if you want. But the reality is, we open up our investment accounts, our 401k, or any type of account you might have that has investments in it, or for that matter, you watch what's happening with the stock market, and people get nervous. They've saved, diligently, possibly for retirement, and they're seeing the value of their accounts whittled away by the declining market and some financial pressures that we're under. So safer investments oftentimes can provide a little bit of stability. The government offers savings bonds. Most people are familiar with savings bonds. You might have received them from your grandmother as a gift when you were growing up. But right now, there are options for savings bonds that are really actually a good option. There's a normal Series E savings bond that pays a fixed rate of return based upon when you buy the bond. But there's also what's called an I bond, an inflation adjusted bond, and that bond pays also a fixed rate of return. It's 0% right now actually, but then it's adjusted by whatever the rate of inflation is. So since the inflation rate is so high right now, I bonds are actually paying a very high rate of return. It will change over time, but in the short term, it's a safe investment that has a very high rate of return, a little bit under 10% right now. So it is a good investment for short term. If you have cash sitting around and you're not sure really what to do with it, an I bond, especially if you can afford to leave it there for about a year, is a good option for that.
And I thought that was really cool because we were just talking with Nick Gromiko about how fiat currency basically just is just a nosedive to zero over the
Mhm.
years. It's
Yeah.
going to inflation's going to happen. It's going to
Yep.
devalue, and basically that bond is saying whatever devalues will compensate for you. So you're not going
Right.
to make a ton, but you're also not going to lose any. I
You're not
thought that
going to
was,
lose. That's the key.
and there's
Yeah.
a $10,000 cap on it, right?
Exactly. $10,000 per person. So annually. And there is a little bit of a twist to that. If you use your tax refund to buy savings bonds, you can get a little bit more than 10,000.
Mm.
But normally, most people think of 10,000 as being the limit annually.
Okay. So there's a little side point. Again, like Tom said, we're not giving anybody financial advice, but an I bond seems pretty good to me. If with all the inflation that's going on, you know,
Yeah,
a dollar from 2 years ago is now worth what, 76 cents?
I know. Yeah, that's the cost. Yep.
Yeah. So unfortunately, that is a good place to put a little bit of our money, possibly, in my
Yeah.
opinion.
Good
So,
idea.
so there's some questions that inspectors are always asking. We have a lot of Facebook groups and things like that you wouldn't necessarily be part of, Tom. And a lot of them ask a lot of questions. First one is business structure. And I put this one first because you helped me with this years ago. I
Yeah.
remember I started my first sole proprietorship when I was like, I don't know, I was 19. I was all proud of myself. I'm like, I'm a big boy now. And so, and then I realized later on, because you told me, hey, things can happen. And you also have some advantages if you switch to an LLC, but things can happen when you're a sole proprietor and you're not really protected.
Very true.
LLC gives you
Yeah.
protection. But I also see guys say, well, what's the difference between an LLC, sole proprietorship, corporation, or an S Corp?
Okay. Yeah, good, very good questions. And you're exactly right. When most people start a business, they start off as a sole proprietor. You think of what it's commonly called a Schedule C business, which is the form that's used on your tax return to report the income. And that's the easiest to do. You oftentimes don't need to do any registration. Sometimes if you want to register the business under a name other than your own name, you get what's called a DBA from the county clerk, and that's a very low cost. But that's the simplest form. The disadvantage is it doesn't allow any liability protection, and it's a high tax cost
Hmm.
because Schedule C or self-employment has an extra level of taxation beyond just normal federal and state income tax. It's called self-employment tax. So most people, they start off in that type of business, but then as they build their income a little bit, they start to think, hey, are there ways that I could change the structure of this business and maybe grab some advantages? And as you mentioned, we have an LLC and we have a corporation. Those are the next steps for business complexity.
So let's step back for a little bit to the sole proprietorship and the tax implications of
Yeah.
that. So let's say I am a newer inspector and I'm starting out my business and I make 50 grand my first year, and I'm pretty excited about that. What are the tax? What would be the tax difference just from between if I had started off as an LLC and a sole proprietor?
Okay, well, yeah, great question. So the the normal taxes you think of are, as a self-employed person, your self-employment tax and then your federal tax, and if you live in a state with state tax, your state tax. So in the case of, we'll just talk about federal taxes because state taxes generally are the same no matter what type of business you have. But in the case of a self-employed person, they have 15.3% self-employment tax, and then they have their variable rate for federal tax. It's that 15.3% that's the one that we have some negotiation on, or some ability to be able to change. So when you're self-employed, you got to pay that 15%. When you're an employee, it's called Fica Tax, which is a combination of Medicare and Social Security. And you pay half of it and your employer pays half of it. And that's the cost sometimes when individuals start a business, they forget about that extra tax,
Mhm.
and it ends up catching up with them at the end of the year. So a self-employed person, generally what we're going to look at being the differential is that 15.3% self-employment tax. Now you transition to another type of entity, and you could possibly change the amount of tax that you pay. But primarily, the biggest reason you want to form an entity like an LLC or a corporation is liability, like you mentioned, being
Okay.
concerned about somebody, attaching or suing you.
So I guess hypothetically, just for my mind, if the 50 grand as a sole proprietor at 15.3%, but if
Mhm.
I start off as an LLC, I could have saved a couple of grand out of
Well,
that.
yeah. So the LLC, the there's what's called a default LLC, and that is a Schedule C, a single member LLC. It's called. So you wouldn't save any with that. But
Okay.
if you formed a corporation, you potentially could save some of that 15.3%. So
Ah.
you say that 15.3%, that works out to be about $7,500. If you form a corporation, and it involves some complication, but you pay yourself a wage
Mhm.
through the corporation, then that 15.3% is only going to be applied to the portion that you pay as a wage, not the profit from the corporation. So normally what people would do to strategize that is they'd say, okay, I make 50,000.
Mhm.
I'm going to pay myself half of that as a wage. And that makes 25,000. And that turns my self-employment tax from 7,500 to half of that, 3,750, and
Oh
then
wow.
it saves you about $3,700.
Which is a big deal if
Yeah, it's
or
a
if
lot of
you're
money.
yeah, what is that 7-8% of
Yeah,
your gross income?
of your gross income. Yeah.
That's pretty intense. So I guess that ties back to filing as an S corp because you don't have to have a corporation to benefit from that, do you?
You do. You have to form a corporation, and then that happens at the state level. So normally you'd go to your Secretary of State, and each state has different requirements for what's involved with forming a corporation. Once you form the corporation, then you go to the IRS and you tell the IRS, I've formed a corporation, and the IRS issues the corporation an identification number. And once you have that, now then you have to choose at that point how the corporation is taxed. And there are a couple of options, but the one that would involve the most benefit is what's called an S corporation. That's a small business corporation that has the simplest filing structure and allows you to take advantage of that opportunity to split your profit between wages and direct profit.
So I guess that's where the confusion comes in. A lot of people say, I want to start an S Corp. You don't really start one, you file as one, correct?
Yeah, you form a corporation by telling the state that you live in, I want to form a corporation. They give you back a certificate of formation,
Hmm.
and then from there you start with your filing process. Yeah.
So when you say corporation, like an LLC, can
An
file that?
LLC is Yeah, so an LLC is a type of corporation.
Hmm.
It's called a limited liability company,
Hmm.
but it's not it doesn't have the same filing requirements, tax filing requirements that a corporation does. So an LLC can file as an individual, just like a DBA would file in a Schedule C. If there are more than one partner in the LLC, it files as a partnership, and that LLC can choose to be taxed as a corporation rather than an LLC. And if that's the case, then it can file as a corporation. So the LLC has the most flexibility, but a little bit of thought has to go into which option you want to take and what's going to be the best.
You know what gives what you're saying a lot more authority too is you're wearing a suit. So
Plus a tie.
plus a
That's
tie. Yeah, if you guys can't, if you aren't watching the video version of this, he's got he's got a suit and tie, a fancy mustache which he's had since he was 12. And it adds a lot of weight to his argument here. So,
I had to dress up for a meeting before this meeting, so
oh, okay. Otherwise, you weren't gonna. So, uh, what
but
I
but
see
if
it,
I could step in, I would
yeah.
say this is why sit down with an accountant. Before you make a decision as to what to do, talk to an accountant about what the various options are and what is going to be the best for you based upon your circumstances. Because I found, at least, from my practice, a lot of people will come to me with a very small business and want to form a corporation or an LLC, and the costs of doing that outweigh the benefit.
Hmm.
But as your income starts to go up, then the benefit outweighs the cost, and then it makes it worth doing.
So, and that's a good point. That's why you need an expert in the field. Just like
You need an expert.
we're buying a home, we need a home inspector to come and say,
Yeah,
yeah, that chimney looks okay, but when you look inside of it, the damper and all this stuff, okay,
exactly.
he knows
Yeah,
what he's
exactly.
talking
Good
about.
illustration. Yeah.
So, would you say the most common way of going about that is an LLC filing as an S corp and paying the owner as an employee?
Yes, that's the most common way, and there's some reasons for that. The first one is LLCs typically have the best liability protection right now under current laws. And so when you form an LLC and you operate inside of the LLC, that gives you a little bit of shielding from lawsuits that can come against you.
Hmm.
So let's say you do something wrong and your company is found liable. Well, the individual can sue you and your company and get what your company has, but many times they can't get your personal assets. And that's the reason really you want this liability shield. Secondarily, the LLCs, depending upon what is involved, they can allow for a little bit less corporate maintenance.
Hmm.
So your listeners may have heard of annual meetings that corporations have to have. Well, when you have a corporation, you have to do those things. Otherwise, the government will say, well, you are saying you have a corporation, but you're not really treating it like a corporation.
Piercing the
An
corporate veil.
LLC, exactly. Yeah, an LLC doesn't have a lot of those requirements, so it's a little bit easier to operate ongoing. Now, there is a disadvantage in many states. LLCs are a little bit more expensive to set up. So you have some additional hoops you have to jump through. For instance, in New York State, there's a requirement to publish your
Yeah.
articles of incorporation, and so that is an extra cost that a normal corporation doesn't have. But once you reach that hurdle, then maintaining it is much easier.
Yeah. And when I had to publish my LLCs, each time I have to do it, it's a huge pain in the butt. You have to
Yeah,
get you have to get papers within a certain radius, and it's like it's
right.
a newspaper. I mean, there's not many
And
of
it
them
has to
out
be so
there.
many times. Yeah,
Yeah.
exactly. Yeah.
So
Some of those newspapers, the only reason they're in existence is to do those legal notices.
yeah, they're pretty archaic laws for
Yeah.
if you're requiring a written publication, it's an archaic
Yeah.
law.
Exactly. Yeah.
So, and then paying yourself, as you mentioned, you basically take on the weight of taxing your own self, like you're paying your
Yeah.
own FICA.
You're being
Um,
an employer.
yeah.
Yeah. So it's similar to if you worked for somebody and you got a paycheck. Well, you would be working for your LLC or your corporation, and you'd get a paycheck. So normally the payroll taxes and payroll operations are complicated. I don't recommend that people try to do it themselves. So there's lots of options out there.
Oh, yeah.
There's the big firms like EDP and Paychex, or all the way from them down to options that are available online. My firm personally uses a website called Gusto. It's really, really good. There is also Intuit, has all kinds of products. I'm not a huge fan of Intuit, but they do have lots of offerings.
Yeah,
So
I know your feelings on Intuit. I personally use Square Payroll. I like that. It's simple
there you
for
go.
me, but
Yep.
Gusto is a great option. I looked into that. You told me about that
Yeah.
actually. Gusto is pretty awesome. But the tax benefits that I've seen since we started, and you called it a pass-through entity, filing as a
Mhm.
pass-through entity, there's huge tax benefits to it. Like,
Yeah, especially as your income goes up and you're splitting it so that half of it is going as a pass-through right to your normal income, and half of it is getting taxed as wages. You're saving 15% on all the money that you're not paying yourself in wages. And that can get pretty significant as the income goes up.
yeah, so if we're doing, a single person filing as an S Corp and an LLC who has a good year and does a couple hundred grand, that can add up to
Yeah,
quite a bit.
yeah, easily. Yeah.
I'm not going to do the math off the top of my head, but you probably
15% on
could.
100 grand, $15,000 right in your pocket. Yeah.
Oh man, so
Yeah.
15 grand in your pocket for just talking to a guy like Tom, preferably Tom, and then just getting that in gear. So that's a big question again that we see in the Facebook groups with home inspectors. How should I form my company structure? So tell me if I'm wrong in the summarization that talk to an accountant, see what's
Yep.
best for you. But a
Correct.
popular option is going to be LLC and filing as an S Corp and paying yourself as
Correct.
an employee.
Yeah.
Yeah.
That's the most common option. That's what I would typically recommend, based upon the client.
Yeah. And I do like using payment services like Square Payroll and
Yeah.
Gusto, and they kind of help you also be in line with your state's regulations,
Exactly. Yeah.
which I love. They just with all the people that work for me and everything, it's like, oh hey, here's a new regulation, here's a notice, nothing you have to do. We'll take care of it as long as you just give us this bit of information.
Yeah.
It's
And
glorious.
it's worth the cost, and that's where there's a break even point with strategies like this. So when you switch over to doing a strategy like this where you're taking an LLC, you're filing as an S corp and paying yourself, there's costs that come along with that. So you
Mhm.
figure, I have to pay now for my payroll cost every month. I have to pay for a corporate set of tax returns, which is a little bit more expensive. Those things add up, and you have to get to an income level enough to where your tax savings is more than what it would cost you to do that. And so normally in my firm, I like to shoot for about $25,000. If you have income around $25,000, that's probably the break-even point where your costs are going to be equal to what you'd save. As you get above 25,000, now you start to reap some of the benefit of it, and you pay less in overall tax than you would spend.
I am super glad you brought up that number because I was thinking at one point, do you really start thinking about that for 25 grand? That's not a lot of home
It's
inspections.
not really, no.
That's 50 inspections a year on average. So if you're charging 500 bucks for an inspection, that's that's pretty good. So you're probably looking at a first or second year home inspector should really start considering that.
Yeah, you're going to want to start thinking about it. Yeah.
Okay. Great, fantastic. Here's another one that you have always tried to help me understand over the years. And a lot of home inspectors are starting multi-inspector firms. So years ago, it wasn't common to have a lot of multi-inspector firms. There were some big guys, but most markets were made up of one guy, maybe two or a team, some family businesses. But now the markets are consolidating a bit, and you have a lot of multi-inspector firms. So a guy will ask, "Hey, should I pay my guys as a 1099 worker or a W-2?"
Yeah.
What are your thoughts on that?
Yeah, it's a very good question, and it is actually a hot topic. It's called Worker classification. So, and you can obviously understand that as a business owner, you don't want to have to pay them as an employee because there's a lot of costs that come along with that. The insurances, the regulations that payroll requires. So your goal, most small businesses would much prefer sending out a 1099. The problem is the government doesn't think that way. They treat the vast majority of those payments as employment payments. So there's a lot of work on the part of a small business to make sure that you're crossing all your T's and dotting your I's so that if you ever ran into a situation where you had what they call an employment audit, you'd be okay. And so the first thing you want to do is you want to make sure that if you are going to be hiring a person as a subcontractor or a 1099 engagement, you want to make sure to have a contract that says the person's self-employed, and you want to make sure to issue the 1099. Don't just
Mhm.
pay them and never report it, because that issuing of the 1099 is you saying, I'm definitively taking the position this person is an independent contractor. Secondarily, you want that person to do work for other people, not just you,
Mhm.
because that's an argument that they are really self-employed. If you run into a problem where those things don't match, or they're only working for you and it really, an outsider is going to look at it and say, yeah, this person's really your employee. Like you're setting their hours, you're giving them the leads, you provide them time off, those type of things. You're giving them their equipment. If all those things happen, you really have an employee. You don't have a subcontractor.
Yeah, and I think a lot of guys don't think about the ins and outs of that. Like, I don't
Yeah,
want my guy working for another inspector. They say, well, then give them a W-2, and
exactly.
that's key. There was a attorney one time talking about that, saying how if the guy only works for you the whole year, his whole income comes from you.
Yeah,
That is big in the government's eyes. He
yeah,
didn't do anything else except work for you. He's not a subcontractor. He's an
yeah.
employee.
And this is actually becoming a pretty good size issue. There are states in the United States that have passed what are called ABC laws, and they are a standard test that can be applied to any circumstance to determine whether the person is a contractor or an employee.
Hmm.
And unfortunately, those tests are hard to pass to get to be a contractor. In some states like California, and I think Vermont is another one, the default is that you have an employee, not that you have a contractor. You have to prove that you have a contractor. So, and there's really significant hurdles to get over to be a contractor. So it is something that, your listeners should pay attention to. And, you know, i- employment audits are not fun, and
Hmm.
they are costly, and you don't typically win them. So it's better to be proactive.
Yeah, from what I've heard, you'd rather deal with the IRS than an employment audit. Like
Yeah.
it's pretty rough. So I guess that kind of comes down to a couple things. So like my payroll software, I have contractors and I'll pay them, but they also work for other people, and it's like I need you for a specific thing. Here's what we need. Do this. Here's your money, and here's your 1099 at the end of the year.
Yeah.
I'm sure Gusto does 1099s
Yeah.
automatically, like Square Payroll does, but it's very like they'll remind us like, hey, make sure that this person doesn't receive regular pay from you, etc.
Yeah.
And it's a lot to think about because the laws were intended more for, hey, guy building a house. Oh, well, I'm not going to do the HVAC. I'll hire a guy. He'll come in, do the HVAC, and I can finish.
Exactly.
Now, it
Yeah.
wasn't intended for him to do every house that that guy does and not get the benefits of being an employee.
Right.
And I think probably
Yeah.
the government's more worried about losing out on money.
Yeah, yeah, true. Because considering when you have an employee, there's a lot of things that come along with that. There are OSHA rules. There
Hmm.
are employment insurances that come along with that, and a lot of the states that have laid down pretty significant laws have really strong worker protections,
Hmm.
and they want their workers to be shielded from a lot of the influ or a lot of the effects that would be on the market normally. So you made a good point about an HVAC contractor that gets hired to do one job. That is actually one of the tests that happens in some of these states. Is the contractor doing something that is part of your normal business operation. So as an example, if your normal business operation is I'm an electrical contractor and you hire an electrician to do work, the odds are that person's going to be an employee.
Hmm.
On the other hand, if you hire someone to pave a driveway, that's not part of your normal everyday business activity. And as a result, that would be much easier to classify that person as a contractor.
Yeah. And also, too, I mean, as you mentioned before, you made a good point. Are you providing their tools?
Are you providing
What
exactly?
about the
Are you
vehicle?
setting their schedule? Are
Yeah.
you, yeah,
Which, generally speaking, most inspection companies are that have employees. Like, be it these 8 inspections from Monday through Friday. Here's your
yeah,
vehicle. Here's your logoed shirt. Here's all your tools.
yeah.
Yeah.
That's another one. Whose shirt are you wearing?
Yeah.
You know, yeah, there's pretty hard cut tests that can be done.
Yeah.
And if you lose these tests, you have an employee.
Yeah. So basically, it's kind of like, if I hire a guy and we do our own sewer scopes, but if I hire a guy to do a sewer scope inspection, we don't do them, but my client wants it. I hire him to do a sewer scope. That person's gone. They drove off in their own truck with their own
Hmm.
logo, their own bill. Well, not their own bill, but, now they are a contractor.
Yeah,
But if I have them doing inspections with me and they're only working for me, they're wearing my logo, kind of a different story
yeah,
in the government's eyes.
exactly.
Yeah.
Yeah,
Okay. So
good
now,
description.
how would you do it as a W-2? Because to kind of explain our industry a little bit, a lot of guys work on commission. So, hey, you get 50% of this inspection.
Yeah,
So, how
yeah.
can you do a W-2 like that?
You can. Each state has their own rules with regard to how you can pay a person, and sometimes minimum wage requirements come into play. But there is what's called piecework or commission pay, and that that is uh, perfectly possible even with employees. So as long as you're not running afoul of minimum wage laws, where you're at least paying them enough so that it represents the hours that they're working, you can pay them a commission and just have the taxes withheld from that commission as an employee.
Yep. And again, a good payroll service, it's going to be able to do
We'll
that
do
pretty
all that
easily.
for you.
Yeah.
Yeah,
It's like, oh, cool. Here's $500 from a $1,000 inspection. Oh, you upsold the sewer scope for, you know,
yep,
$400. Here's 200 extra dollars as commission for that. And it's commission based pay. It's kind of like salesman,
yeah,
right?
exactly. Yep,
Okay, great. So that's fantastic. I loved your explanation of that because that's a big one. That I think a lot more
yeah.
inspection companies do 1099 than probably is safe
Oh,
to.
and that's actually common in almost every industry,
Hmm.
because the 1099 is much easier,
Yeah.
and you get around all the complication that comes with payroll. But one good thing is if you're taking advantage of the LLC strategy, where you're putting your income through an entity like an LLC or an S corporation, and you're paying yourself in payroll, well, you've already started the payroll process.
Hmm.
So adding another employee to that process is not as complicated as starting payroll up from the beginning.
Yeah, and that's a good point because, like for me, it's a couple of clicks and
Yeah.
there you go. Now I have a new employee. You
Yeah.
know, so
And it doesn't change the cost much either, because you have an add-on for one extra employee, but it's not like double the cost.
yeah, exactly. So great stuff. Awesome.
Yeah.
So one final thing. This isn't a question that home inspectors ask, but I feel like they should.
Okay.
And it's one that I didn't ask until I thought about my own mortality. You know, it's like when you're 20s, you're like, I'm immortal. I'm gonna go do something stupid. Then in your 30s, you're like, boy, why does that hurt? And
Yeah,
then
exactly.
and then at some point you're like, oh, I'm gonna get old, and this is
Yeah.
not gonna feel good in a little
The
bit.
calendar moves pretty fast.
Yeah. So saving for retirement. What are some things because it's not like somebody's matching our 401k. And to be perfectly
Yeah.
frank, I still don't 100% understand a 401k. I think I kind of like 80% got it. Um, what are some things that we can do to save for retirement, whether we're that new guy making 50 grand a year in gross or a big time, 10 inspector company
Yeah.
out there? What are some
Yeah.
things we can do?
Great question. And this is something so important. We talk to all of our clients about saving for retirement. Even from the time they get their first job, we encourage them to start saving for retirement, because retirement savings really has the biggest benefit if you do it over a long period of time. But for self-employed people, there are a lot of options, and they can be a little bit confusing and intimidating. So that kind of starts off some people on the wrong foot. They don't do it because they're intimidated by the decision. But the basic thing is a self-employed person has the same options that a normal person does with regard to IRAs. So you have what's called a traditional IRA, and you have what's called a Roth IRA. The traditional IRA, you can oftentimes take a deduction on your tax return. So if you put $1,000 in and you're in the 20% tax bracket, your $1,000 would save you $200 in tax and only end up costing you $800.
Nice.
But then in the future, when you take that money out, you have to pay tax on it then. So you're just delaying your tax payment till later on. A Roth IRA, on the other hand, you don't get a deduction for putting the money in. So you put in $1,000, it costs you $1,000. But as long as you meet certain requirements, in the future, when you take that $1,000 out, you don't have to pay tax on it or any of the earnings that it creates.
Mm.
So if that $1,000 turns into $10,000, you can take that all out with no tax on it. So that's a really powerful savings goal, especially over a long period of time. Now, for self-employed people, there are lots of other little options that can allow you to be able to make larger contributions. There's what's called a single member 401k. There's a simple IRA. There's an SEP or a Kubiak plan, other types of investments, strategies, and retirement plans that allow you to contribute in potentially up to $50,000 or more. But some of them require some advanced planning. So again, sit down with an accountant, talk about your options. Don't wait until April 15th to make a retirement contribution.
Mm-hmm.
Do it proactively.
Okay, so you lost me at some of those other ones, the little retirement. There's an SEP and a CRA and some other
An
so
ABC.
an ABC, yep, XYZ. So let's say I'm going to completely ignore your advice and not talk to an accountant. What would be kind of like a safe bet for those of us who are just kind of like, "Oh, I'm going to do this anyways? You know,
Yeah.
what would be a safe bet maybe?
The safest and easiest thing to do is either an IRA or an SEP. Those are the two easiest types of retirement accounts. The problem is that both of them have limits.
Mm-hmm.
And as a result of those limits, you could, depending on what your income is and what your situation is, you could be boxed out of making the contribution in some cases. So if you're not going to talk to an accountant beforehand, but you do want to make a retirement contribution, the best thing to do is to wait until you do your tax return, and then your accountant can tell you, yes, you can make a contribution, or no, you can't make a contribution. And once you know that, then you can put the right amount in.
Don't wait till April 15th to do that.
Yeah, if you wait till April 15th, you're going to be behind the eight ball. Do it, as your tax return is getting prepared.
And I like how you told me one time, just turn it on and
Yeah,
automatic contributions. Don't think about
yes,
it. It's just like rent.
yeah,
It's your mortgage. It's just going out that month and you don't think about it.
yeah, correct. So you could, for most people, the IRA contribution limit is $6,000 or $7,000. So if you want to reach that IRA contribution limit, you say, all right, if I contribute $120 a week, I'll get to my contribution limit for the year. So that's your goal to shoot for. If you can't do that, put in $25 a week or put in $10 a week.
Mm-hmm.
And then every couple of months, raise it by $10. And it's out of sight, out of mind. And over a long period of time, you'll save a lot of money. I usually tell my clients when I talk about retirement to start a contribution and raise it by 1% each year. And then they owe me dinner when they retire because they'll save a lot of money without even knowing that they're saving it.
How many dinners have you gotten?
Nobody's retired yet.
Oh,
so
come on.
You give me dinner all the time.
Yeah,
so that counts.
I'll give you dinner this Friday.
Okay.
There you go. That'll work out great. So, but that's awesome advice because a lot of times we're not thinking about that. And retirement accounts also are a good safety net for other things. Like if we get seriously injured, the government will say, they'll make exceptions in certain cases, right?
That's true.
Yep.
Yeah, and even during the pandemic, the government waived the early withdrawal penalty.
Mm-hmm.
So that allowed people to access retirement funds that normally they wouldn't have been able to.
Yeah, so it's not like, man, that's just completely gone. If something big happens,
No.
I can't touch it. It's a safety net in a lot of different ways.
Yeah.
So.
And the other challenge, like you mentioned, we oftentimes don't think of retirement because we consider it to be far off. But
Mm-hmm.
the reality is it's not. And if you start saving early on, you can save a lot of money over that period of time you're working. If you wait until you're older, the amount you have to save each week starts to get pretty big. And, then it becomes challenging to save that much. So the earlier you start, the better off you are.
I'm going to digress into something weird and crazy, but I was watching this documentary about how we don't recognize our old self. And they actually talked about retirement. They said not enough people retired, and they went to psychologists to say, why can't we get people to retire? And they actually came back and they said, it's a psychological condition where we don't recognize our old self. We don't know him. We look back,
Interesting.
yeah, we look back on ourselves and I remember when I was 20. I remember when I was 30, but none of us think, I know that guy at 65 with the bad back and
Yeah.
the extra beer belly.
Yeah.
That's it's like we put that off in our mind. Like you said, it seems far off. It's not
Yeah.
that far off.
It's not that far off. No.
Yeah.
Yeah.
Well, I tell you what.
And Social Security alone is not going to be enough to pay for your retirement. So don't count on that.
Yeah, I know. Yeah,
Yeah.
if you're counting on Social Security, you might be
Yeah. Bad bet.
betting on a bad horse there. But I tell you what, this is one of my favorite podcasts so far. You gave some fantastic information, Tom. This is
Oh, thanks for giving me the opportunity to be involved. I love it.
Yeah, no, this we'll have you on again because you have some
Anytime.
fantastic stuff, and maybe we'll have you on too before tax season starts, so that
Sure.
you can help us to understand some things that we can do to get ready for it.
Yeah, happy to. Actually, November, December is a good time to think about how you can end your year. So plan on that. We can talk about it next time.
Perfect. So everybody listening, know that Tom will be back, and Tom, thank you very much for being on in your busy day, and we'll talk soon.
Thanks for including me in.
Yep.
Talk to you soon.
See you Friday.
Sounds good.